Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Wednesday evening. We're right now at about 5:35 p.m. Central Time on May 6, 2020. Now, before we get too far, I want you to start focusing and understand that early in the morning Friday, we're going to get what our unemployment number is going to be. It's going to be obviously big, but is it baked into the market or not? Part of me doesn't think it is with the rally we've had in stock indices. Part of me says the market's already to the point where it says, let's assume it goes to 15, 20%. It'll get back, as some of the Fed governors are saying, at 10% at the end of the year. That's still a huge number, friends. What about the implications of all that? I don't know. What I do know is that the Nasdaq is the strongest of the stock indices. It is the one that got over the April highs. None of the others did. There was a battle today, and if you were watching the market during the day as I was, you were up at, 100 points at a time in the Nasdaq, and you started breaking in the other markets, and up until about, I want to say 2:30 in the afternoon, no, 1:30 in the afternoon, it looked like there was an umbilical cord. One would drop, pull the other with it. Then the weight of the market started at the end of the day, and by the end of the day, the bears won out in the S&P, the Dow, and the Russell, but the Nasdaq still closed with about a 45-point gain. It is the strength of this market. It is the new stocks. It is the FANG stocks. It is the stocks that will work because we're in a new, whatever it is. We're at a new norm. And that new norm, all right, are you going to see people willing to travel, public transportation, restaurants? The big boys are really worried. You're watching the Larry Finks, you're watching the Sam Zells, you're watching the Warren Buffetts. They're scared of these markets, all right? Different thing. Other forecasters, a lot of people wondering, we've had this rally. Is the market ahead of itself on the rally? Or are we, the other side of it, putting too much emphasis on what the new norm is and the stock market can withstand it? We'll find out as the week ends. In the gold market, gold has been trying to break down, trying to get back to a key moving, to its lower Bollinger Band, to be honest. And we'll see if it can get any further. Currency markets, so difficult right here. They're just churning people. And even the energies. What I do have to tell you is energies, you got to remember, they've almost doubled in price recently since that washout when they went negative. Keep that in the back of your mind. Governments everywhere. Cities everywhere. They're going to float instruments to get money. They have to find money somewhere, which means they've got to pay up some of them for it. Remember that too. All right, so here we are with the S&P 500 index. We had a nice bounce to 2870 on a closing basis. As of the current quote, if the market ended right now, we'd be at 2829. But for the week, we are up 8 points. Let's not forget that. When we take a look at a bar chart with no studies other than the Fibonacci counts, we've gotten to a 62% recovery in the market, actually a little higher than that. We've pulled back to the 50% arena, and the market's trying to figure out what to do. When we take a look at this chart, we can also see that the April high in this market has not been taken out. The pattern is still bullish as the swing line, and this is a chart without the swing line. When I add the swing line, and what the swing line is, it will take the current quote, and it's going to draw a line to it, either from the low of the day or the high of the day before. There's 5 rules that set it up. I teach it in my charting course. You can go on our website under the word education. That's where the course is, and you can decide if it's for you. It's not expensive, and I think you'll learn a lot. It's 6 hours of videos. And I walk you through a step-by-step teaching. All right, so we have the pattern of higher highs, higher lows. Until this market takes out 2771 on this pattern, that chart is still bullish, all right? We did get a pause. What's the pause? You do have a lower high. So suddenly the market, instead of the stepping ladder impact it had, higher lows, higher highs, is now gone and kept the higher lows, but suddenly we have a lower high. That's called a pause. If you get under 2771, you could end up under this pattern with lower highs, lower lows, into a bear pattern. That's the definition of bearish. Lower highs, lower lows, uptrend, higher highs, higher lows. Where's the battleground? The 18-day average of closes is what I think is the line in the sand. It's the DMZ zone. It's also more than that. When a market is well under it, when you get a first rally, it is not uncommon. It goes back to that number, and that's where the stall happens. If you're over it, you fall back to the number. Go back and do your own homework. I teach you this, and I show you how the other moving averages work as well in the charting course, but that's where you're at. So you've come back to rest, if you will, at that number. I think you're just resting until you get into the unemployment number. That's what I'm expecting. And that's where the game is going to start getting answered. When I put on Bollinger Bands, why do I use them? 95% of the time, the market will trade within this algorithm. So I use it and look at it this way. Gee, if the market's in an uptrend and it goes up and hits that band, the first time it hits it, 95% of the time it's going to stay within it. Why aren't people taking money off the table? I can't answer why they're not. I know what I teach. Therefore, when the market got there, that's the first time since back here, market fell back to a neutral zone. Think of a pinball machine. You've got an uptrend. The neutral zone is like if you tilted it, you go back to the neutral, you hit reset, and the game starts again. So now you're back to the resistance here, the support here. If you take out the 27.71, the first objective's 27.34. If the market from here rallies, where's the resistance? Back up at the upper Bollinger Band, 29.28. Eventually you break out of sideways patterns, but recognize when you're in a sideways pattern, because it's out of sideways patterns that the big moves develop. All right, what about momentum? I believe momentum leads price. Not every day, but most of the time, the vast majority of the time. How's that for better description? It's pointing down. I've got the trend up. The bias right now is to the downside because at the moment, this exact moment in time, the market's trading under 28.31.15. And if you take out 27.71 with that down, with the bias then down, then I'm looking for that potential. The word is potential, 27.34.25. In the Nasdaq, I recognize the power of this market. And if in this market, if we take a look and we come back right over here, and I think it's important, if you take a look here, you got to a high, and this was on April 30th of 91.44. That's your May high. QQQ today took out its April high. You did not do that on the futures. So I look to see where's the discrepancy here, and I'm trying to understand what that's doing. I can't explain it just yet. If the market takes it out, well, then it's in line with what the QQQ did. But you've got, you know what that is, of course. That is the ETF that follows the Nasdaq. You've got the pattern, higher lows, higher highs. I don't think anybody's arguing that you're not in an uptrend in the Nasdaq. I don't think anybody's making an argument that the FANG stocks are very powerful right now. In the Dow, different looking chart. First of all, you're starting to fade away right here. I take a look here for the April high. We're nowhere near it. That number was here on April 24,792. The market's fighting at what number? Can you see the 18-day average battle? If it can get back here and take out this low of 22, let's see what that is, I don't remember it here, of 23,208, then we're looking for the market to drop a bit more, 22,917. Okay, but that's still a nice break in the market if it occurs. What else is on the chart? Do you not notice the sideways action? From sideways action, big things happen. So we'll see. I'm scared of this unemployment number. In the Russell, the market's pulled back to its 18-day average. It had made its high back at the end of April here, hasn't gone for it. Any move under 12.20.10 is bearish. It will give you the lower highs, lower lows. You wouldn't want to get back over 1303.70, and a target could be this lower number of 11.447. Momentum down, but you've got right now the swing line up and the bias up. I'm giving you the what if. The bulls are trying to defend their position right here at that 18-day average of closes. In the VIX cash, the trend is down. You have lower highs, lower lows. The resistance is the 18-day average. Now, one of the trades I've watched with a lot of fanfare for a long time is when you hit lower Bollinger Bands in the VIX, and admittedly, it had been at levels that were way back here. But if you hit them, you were getting back to the 18-day average. For the first time, that happened a week ago. And what I wrote in my newsletter for my clients is pay attention to that. There's always more risk in writing a call because it can go finite. But you can only go to zero, I think, in a VIX, the way the index is set up. I could be wrong on that. I never saw crude oil go negative. Maybe I'm wrong on all that. In the T-bond market, lower highs, lower lows, right in today to the Bollinger Band. What do I teach? That is where I think the pros took money off the table. Why not? Why go through anything until you see the employment data and the reaction to it? What would you do in the 10-year note? Trend down, right to the lower band. I'm not expecting follow-through. I'm expecting that to hold right here. What about the dollar index? A churn. Just a churn in a sideways market. That's what you have. You're not trending. You have a higher high, lower low, and the downtrend ended right where it should have. Market went right to the lower Bollinger Band. You had lower highs, lower lows, and the market's kicked all the way back up. Again, I think pros get out at the Bollinger Band highs and lows, a minimum part of their position, and then tight stops if they're going to see if it can do anything. You can get a move like this. Go play for them. 95% of the time, it's not going to happen. The market's going to stay within the bands. That's just how the algorithm's set up. Eurocurrency, out of a trend. You had gotten up, you had a chance to get out of this market. Up at the Bollinger Band, and why would anybody go through yesterday's German court, high court decision that came against, we didn't know which way it would go, the European Central Bank, actually the EU, what they're doing, how they're doing it, and how it impacts German law. Let the scholars fight it out for 90 days. But it's not a bullish event, and the market is showing you the impact of that. In the end, I admit to surprise. Traders are buying this market over and at the upper Bollinger Band. What are they seeing? The only thing I think they can be doing is they're prepping themselves. If they're doing that, they must think something about this employment report. It's the monster. It's the elephant in the room. We'll see just what it is. At the same time, something else is happening. When both numbers that make up the slow stochastic close over 80, 3 times in a row, you're embedded. You're not there. You didn't have them both here on Tuesday. Yesterday they did, and today. You've got to get now into the market to one more day to prove that they could do it. I'll stay with what I teach. Until it happens, it isn't happening. Bitcoin, it's the grind, is you got the halving situation on May 11th. The market is picking up, and it's doubled in price this year. As the market has come back, traders realize there's less supply. Then we get to the differential between crude and WTI. And when I say crude, Brent crude and WTI. You can see the differential's been narrowing. It's back into the 418 level. It got up over just $5, but it's holding. 5 might be a big number right now. As I look at where we're at in the Brent, you're overbought. Any reading over 70 is overbought when it's not embedded. You're not embedded. So I see an overbought market in an uptrend. It's looking to me like it's not going to be able to make it to that upper Bollinger Band. I wouldn't be surprised to see some traders take money off the table here. Same in the WTI, but not overbought. This market's just clean. Still in an uptrend, still a target there, but I'd be careful right here. You've come up just recently from 15 to 27.90, so you didn't quite double, but you got pretty darn close. Rebob gasoline, fighting and right now against that upper Bollinger Band. Will we embed? That answers the question then as to what I would think. So both numbers over 80 today, and this is Wednesday. Both numbers over 80 yesterday. Day before they were not. So Thursday is going to determine, and we're already in Thursday trading, if you embed. If you do, then until that reading is lost, I expect to see strong buying by those that are bullish, looking for the market to keep charging to the upper Bollinger Band and try to pushing it to a higher number. We then get to the nat gas. I'm looking for support in this market right here. Now this big rally that you had in the pullback, you're going to get tomorrow another set of numbers from the EIA. Are those numbers going to be big or not? What happens on the first challenge of a Bollinger Band from the way I teach you here? I think the pros come out. They got out then at this number here. You were hitting the 230.80, okay? And now you're back down in 48 hours to 217. That's not a bad little trade that they took off the table. So you put it together, you try to figure out where you're going to go and what you're going to do with it. I'm still watching carefully the seasonals, and seasonals are important here. Now, what are seasonals? There are patterns that markets follow. And one of the services I've been with and using, I want to tell you 3 decades. I think every year I buy their service. I want to see what the seasonals are on certain days, certain patterns. Where are they? So what they do is they put together both spreads, outright futures, and commentary. And with it, you get a tool as to what the seasonals look like. Now, the first thing I'm going to tell you, I would never use a seasonal by itself. And some of them have worked 15 years in a row. When they stop, I think, at 82% reliability, which means winning 13 out of 15 years, they get to the 12th and they don't win, they're dropped. Market waits for another one to come in, and there's so many you've got to learn to look at them. And you can plot the seasonals. What's a 15-year? What's a 5-year? What's a 30-year pattern? Work with it. I use those, and I use those in my metal reports and my other reports. They give you the articles right here that you can get with. It's a heck of a service. I use it. I love the people, and I've been with them forever. So if you're interested in learning it, I'm going to tell you the caveat. Past performance never can guarantee future performance. It could work 15 years in a row and you get in and that's the 16th year, right? And it blows up. It's a tool, no more than that. It is not the holy grail. Got it? If you'd like to get free copies of it, just give my staff a call. Go to our website. We'll be happy to get you signed up. I'm Ira Epstein. Thanks for watching, and I'll see you tomorrow.